McDonald's has been doing exceptionally well since the beginning of this pandemic. Will it continue? Stay with me and I'll show you what I think the chart is saying. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a bear flag on McDonald's Corp. We'll take a look at that, but first, a few active trades to look at, and later on, a deep dive into the archive for Tim's trading maxim. We've had a bit of a respite from the heat in Texas this week, and I'm thankful. Maybe it'll continue. Happy Friday, guys. Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's have a look at the active trades. As I mentioned on Monday, Palladium broke above this consolidation that I had drawn here, so I've been trailing the stops with the PSAR again, currently at 21.35.26 to lock in 142.55 per contract. Looks like this might be having trouble at this level right here. Could be back in another little consolidation. We'll just keep an eye on that. This huge wick is not a good sign. Of course, this is Thursday and it's still early in the day, around 1 o'clock New York time, so this could still close near the top of this candle. Amazon took this huge dive this morning, again I say Thursday, and I haven't moved the stop up on it yet, and that's good because it did hit the PSAR, which would have taken us out if I had moved the stop. If you move the stop, it's okay. There will always be another trade and you still have profit on your first half. In any case, I'm going to hold this stop at the break-even stop loss for now. I hate to be stopped out break-even on the second half, but we've got a bit of profit on the trade, so I'll take it. Of course, it's not like I have any choice, right? That's the purpose of good trade management, to try to anticipate market movements and to be flexible enough to react to whatever the market does. But since we have no crystal ball, or at least I don't, there's no real right or wrong about how you do this. So Planet Fitness looks like it's in this consolidation triangle that I drew right here. For now, I've got the stop locked in at 58.25, and I'm going to hold it right there. That locks in $1.84. I'm going to hold it right there until this triangle gets a positive, kind of like we just did on Palladium. Well, we got the Australian dollar Japanese yen breakout right here. It hit our first target, got half off for profit, and then the second half stopped out this morning. So that gives us a 0.67% gain on our account. I'll take it. Every little bit helps, right? Coca-Cola trade setup triggered yesterday right here. I got in it at 51.19. It pushed up this morning to 52.14, which was 4 cents above our first target. So we got half off for profit, and then it just dropped down here and stopped out the second half. So again, we've got about 2/3% profit on this trade. I'd love to get more, but that's just the way it is. We got to take what the market gives, right? And the Russell 2000 triggered the sell right here on Monday. I got short at about 1561.30. Then we got a close Wednesday back inside the bear flag. So I closed the trade for a loss of 31.20 per contract, which represents a 1.4% account loss on this. And of course, Thursday it then pushed down near our target, but that's just the way it goes sometimes. Closing a trade early on a reversal of the momentum like this is partially what makes this a successful strategy. Once in a while, you know, it's detrimental to do that, but more often than not, we avoid taking a full loss by doing that. And of course, my corresponding trading maxim is we not only win by winning, we win by not losing. So I'm done with the Russell for right now. And lastly, the Australian dollar Swiss franc has pushed above the descending triangle right here, so I'm calling this one a blown pattern. In other words, we didn't get a trade here, and I'm no longer considering this a valid setup. Having said that, since the volume and the volatility are continuing to decline, I'm going to watch this and see if maybe we've got a trading range setting up here on this one. I'll let you know what I figure out. And that's it for today's active trades. Let's take a look at today's trade pick. McDonald's Corp took a real hit right here about the time the pandemic was kind of getting started in the U.S., but that didn't last very long as traders began to realize that this corporation is kind of nimble on its feet. And of course, it's been in this upward channel ever since. That's been good, but I think it could be a bad sign longer term. Just to be sure everyone understands, a bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this one. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to sell a daily candle close below the bear flag. On the breaking candle, we want to see this volume reach up to this volume average. On the breaking candle, to enter a full-size position, we want to see this volume reach up to this volume average right here. If it doesn't quite reach the average, but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate the percentage by dividing this volume by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on this trade. The stop loss is 1.5 times the ATR. First target is 1 times the ATR. So what that means is on the breaking candle, this breaks down below the bear flag, just ahead of the close, say 15 minutes or so before the close, set up your sell order right here, look at the ATR, multiply that by 1.5, and measure that distance above your entry for your stop loss. Measure 1 ATR below your entry for your first target. If after entering the trade you get a close back inside the bear flag, I suggest you take the loss right then and not wait for the stop loss. Our intention is that a breakout of the pattern should be explosive and hit the target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on McDonald's Corp. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, a rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today we're going to take a deep dive into the archive. Tim's trading maxim number 15. It is possible to commit no mistakes and still lose. That is not a weakness, that is life. And that's a quote from Captain Jean-Luc Picard. For those of you who don't know, Captain Jean-Luc Picard is a character from the television series Star Trek The Next Generation, which aired back in the late 80s and early 90s. He's one of my all-time favorite characters, and in my opinion is the example of an excellent leader. To set up the scene for this quote, the captain was advising one of his senior staff that happened to be an android with an intense desire to be human or more human-like. The android, Data, was commiserating on his weakness in his failure to be more human, even though he made no technical mistakes. I was watching this episode some years ago and realized how well it applies to trading. When I started learning to trade, I thought I was doing something wrong when I took a loss on a trade. So I considered each loss to be a failure due to my weakness and inability to trade with no mistakes. It took me some time to realize that I wasn't making mistakes and that losing was part of trading life. Remember our McDonald's trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't forget to sign up for my free Trading Picks email list so you don't miss any of these great picks. You'll get first shot at seeing the 2 or 3 trading picks a week that I pick from all different markets. And the best thing about it is it's free. I'll put the link below this video. Also, don't miss my Dream Trade segment on Wednesdays. I'll be showing you one of my Dream Trade stock setups each week. I'll try my best to time them so you'll be able to get in on them as well. Check out the link below to find out more about the Dream Trade services at Trading Strategy Guides. And be sure to come back to Trading Strategy Guides YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments, in a training video, or both. And remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education series next Wednesday when we'll continue to look at MT4's menu. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great weekend, and I'll see you on Monday.